What's going on, people? It's GBP baby. Welcome to another backtesting video. Today we're going to be focused on weekly profiles. This is something I've been meaning to do for a while. I've marked out 1, 2, 3, 4, 5, 6, 7, 8, 9. I've marked out about 9 weeks worth of data, and we're going to be looking at the weekly profiles, which can be found here. Bear with me. So this is from ICT's video. I'll link it below, but this is the video where he defines all possible outcomes for weekly ranges. Obviously there's general deviations because these are very basic drawings. However, these are the outcomes for the week which tend to happen. So what I'm going to be doing is I'm going to be going through some price data, and we're going to take a good look into how each week has formed and how close it is to the weekly profiles that we have defined. So on this week, you can see that we made the low on Monday and we made the high of the week on Thursday. So what I'm going to do is I'm going to mark them out, and I'm going to look back and see what PD array that price is trading to for these weeks to come into formation. I do need to make these lines visible on all time frames, so I am going to quickly just toggle that. That's going to take a minute, so I'll be right back. Right, so now that that's done, we're going to go to the daily and we're going to see how did the price make this low. So what I'm going to do is I'm going to mark out the actual low and I'm going to run it back, so that means I can see on the daily what it's actually referring to. And then I'm going to make that blue, and I'm going to make that red, and I'm going to make the top blue, so we can see what is price referring to. Obviously we can see there's a massive fair value gap here on the 4 hour, but I'd like to see it from the daily, and then we can work our way down accordingly. Right, so if we jump to a daily now, we can see that we've traded into it looks like price is referring to this bearish order block, daily bearish order block here. And then on the lower side, this is supposed to be blue, wasn't it? On the lower side, but also traded into this bearish order block, which is stacked on top of this one. So we'll drop down to the 4 hour, and we can have a better look. It's going to be annoying that I'm going to have to keep scrolling back, but hey ho. So we traded into this massive fair value gap resting here to create the low of the week, and you can see how we basically turned around at the 50% level off it. Although we didn't precisely turn around there, you can see how quickly volume left and obviously created the low of the week there. 6, 7, which is here, and then we can make that dashed red, and we can make that thinner. So I'm going to drop down to the 1 hour. We can have a better look at how price traded into that area, and what time as well. Time is also obviously a very important factor into these things. So we actually traded to the top of this bearish order block, then turned around. So this is a bearish turned bullish order block. Again, when price trades, remember, when price trades through an order block like this, that bearish order block becomes a bullish order block. So this was once bearish because it caused this movement down, and then as soon as we trade through it, it should act now as a bullish order block, and we can see that reaction when price trades to it right here. So I'm going to leave that on, and you can see how aggressively as well price ran down to this level, and then we moved higher on Tuesday, Wednesday, creating the high of the week on Thursday, and then we fell off into Friday. So I'm going to go to the weekly profiles, and we're going to look at what weekly profile actually matches this. It does look like it's the classic Tuesday low of the week. Now obviously classic Tuesday of the low of the week would mean that that previous page should show Tuesday making the high, but we'll look at the others, see if we can find any highs made on Monday. And you can see that most of them use Tuesday. However, the week in general is closest to this how do I say it? It's closest to this profile. So what I'm going to do is I'm going to copy this. I'm going to go back to trading view. You can actually paste things into trading view, which is pretty cool. And you can see that this week was this. It looks like this, as in we created the low here, and then we moved higher, and then we traded down in Friday. So how is the classic Tuesday low of week formed? There's manipulation, so we should be hovering above a higher time frame discount array. This was the higher time frame discount array, this 4-hour fair value gap, and you can see that although we didn't hover around it on Monday, we did hover around it. Oh, I just realized you're not seeing what I'm seeing. This was the higher time frame discount array, and although we never hovered above it on Monday, we were hovering above it throughout the previous week. So I guess that could be classed as some kind of confluence. And then you can see how we traded down into it, and then how ICT says to anticipate this is to know the higher time frame discount arrays, and when the market fails to drop into that array, odds are Tuesday will likely see the drive lower, Tuesday London or New York session. So we can see that this actually happened during New York session on a Monday. So we went into that, created the low on the New York session, and then started to work our way higher. So we'll look at next week. To be honest, I'm trying to think of a better way I could possibly be filming this, because this is quite complicated, but hey ho. So here we can see that Monday again made the low of the week. And we traded back into where we traded pretty much the week before to create that low. And then Wednesday created the high of the week this time. So we're going to go and we're going to take a quick look at our profiles, weekly profiles, and we're going to find where is Wednesday making the high of the week. Here, I just saw it. So Wednesday high of week, price trades lower into Tuesday, and then Wednesday creating the high of the week and then trading off lower. Now, in our example, we don't trade lower than we don't trade lower after Wednesday. However, in the profile, it suggests that, so this might be the wrong one. So I'm going to continue looking, and we're going to see where else Wednesdays are formed form the high. So here Wednesday forms a high, but you can see we take out liquidity here, which didn't happen. It's definitely either this one or this one, but I'm not sure. I guess it looks more like this one. However, the fact that this low got taken out here, it's interesting. What we'll do is we'll have a look if there was a consolidation on the Thursday. So we'll go back to trading view. Was there a consolidation on the Thursday? Yes, there was, and those drive lower. Okay, I'm going to go with the idea that it was this one. Manipulation hovers with the higher time frame premium array, hovers below the higher time frame premium array Monday and Tuesday, and then rises into the higher time frame premium array on Wednesday to form the high of the week. Anticipate by knowing the higher time frame premium arrays, and when the market fails to rise into that array, odds are Wednesday will likely see the drive higher, Wednesday London or New York session. Monday and Tuesdays can be up days as well to form the profile. Right, okay, cool. So we'll go back to, I keep forgetting that you guys, I need to switch the screens. Right. So you're saying how Wednesday sees the high formed based off the high time frame PD array. So we'll look at the 4 hour and we'll have a look and see. This should be, I can stay like that, and you can see that there's again a massive fair value gap, and on Wednesday we drive up, closing it and trading to the 50% level of this and into this fair value gap, this inverted fair value gap. So this is a bullish turn bearish fair value gap. So it's bullish, we find support, we break through it, so when price returns there, what should happen? We should turn away from it, and that's what we see happening here on Wednesday as it creates that high. We'll drop to the daily, see if we can see anything better. I'm probably going to stop dropping to the daily because it looks very messy. Yeah, oh dear. Yeah, let's not do that. We'll stay on the 1 hour. I hope this is making sense, guys. But this is just research I wanted to do for my own study anyway, so potato, potato. You can see that we consolidated on Thursday and then we drove lower. So this profile, I would say, is this one. So I'm going to copy that and I'm going to go and I'm going to paste it into trading view. There we go. And we can see that that profile is pretty much formed here. So let's say it was Monday and we had an idea of this bullish turn bearish fair value gap on the 4 hour. So that's pretty much that second week done. I am going to quickly screenshot these because I'm going to save them, and if you join my Discord, I'll be sharing them in there for you guys to have access to, because it's things like this which are important for being able to anticipate certain kinds of weeks being formed. So I'll screenshot them after the video actually, but they're all going to get screenshotted. Let's go on to the next week. Let me see. I was just thinking about how price is trading into here. I would anticipate price trading into this. Reaching up into this is another story, but that's interesting to see. We'll drop down to 1 hour actually. We'll see how it treated it on that time. Treated that range on this time frame. So it's this fair value gap here, I guess, and that's where volume traded to, and then it wicked up. Again, bodies do the work, or bodies tell the story, as ICT likes to say, and then the wicks do the damage, and that's what we're witnessing here. So that fair value gap, fair enough. Here I wouldn't expect prices to even trade to, because you can see we've traded down, and up in this. We've traded up and down in this range multiple times. There's a whole video on that on ICT's channel, but there's reason that price is going to refer to this fair value gap and doesn't necessarily need to trade any higher than that, and it's been able to recognize that back and forth trading. Anyway, let's go on to the next week. So we've seen high made on we've seen the Tuesday low of week classic, although it was made on the Monday, which is throwing me off, but what can you do? And then we've seen Wednesday high off week now. So let's see what the next week has. We can see the low of the week was made on Tuesday, and then we trade higher for the rest of the week and slightly lower at the end of Friday. So I'm going to see if there's a profile that goes straight up, because that seems to be what happened. Usually it's Friday that the retracement happens. If not, then I guess this is just the classic Tuesday low of week and then move higher for the rest of the week. So again, I'm going to mark out the low of the week, find out what we traded into, and I'm going to mark out the high of the week. So we've got the low, and we got the high made on Friday. And this again, this is trading back into something from a very long time ago. So in fact, yeah, okay, let's go to the 4 hour and see what PD arrays are visible. So you can see we traded to the 50% level of this wick, and also into this wick, which is traded to this order block. So this is a range from this high to this open to this low. Wicks are ranges just as much as fair value gaps are ranges, and you can see we traded to the 50% level of that, or whereabouts, and then wicked and then traded away. In terms of seeing this as a PD array, again, this is something I don't know if I'd be able to call out as being a PD array. I'd recognize that this is a rejection block though, because you can see how when price traded into this rejection block, let me mark this out. When price traded into it, we got rejected away. So when price trades into it again, we should expect the same thing, and price should stay above the 50% level, which it did. Remember, the wicks are doing the damage, not the bodies. So the bodies are respecting the idea that this range, this 50% level is being respected. So I guess this is the PD array, the wick being a rejection block, it'll probably be helpful for me to name these as well. So when I do the screenshots and stuff, I'll have them all named and marked out so that I can see what PD arrays I've recognized, for me to know that, okay, we've created the low on Tuesday, this is likely the low of the week, and then we ran up for the rest of the week. So let's go to the 1 hour again. I think 1 hour is best when looking at weekly profiles by lots of things. You know, you can, it's not too much information, and you know, you can see pretty much how price traded. There's also a bullish order block here that we traded into. So let's go to the weekly profiles and see what we can find. We want to find a Tuesday low of week and then some kind of run higher on the weekly profiles, that is. So let's have a look. Okay, so I think it's either going to be this one, which is Wednesday low of week, or it's just going to be a classic one. How to anticipate: know the high time frame discount arrays, and when the market fails to drop into that array, odds are Tuesday will likely see the drive lower on Tuesday London or New York session. And then I'll compare it to this one and see the difference, because this could be due to the fact that we ran up right into Friday. It's possible that this might be this profile just, you know, nudged over to Tuesday. Anticipate when market is trading a long term or intermediate term low. Trading at a long term or intermediate low. Price will pair institutional buy-in with pending sell side liquidity. So it's a sell stop raid. So it runs down, takes out sell stops, and then moves higher. So let's go back to the trading view. How long have we been going? 17 minutes. I'm probably going to end this video at 30 minutes as per usual. So I guess we took out sell stops here, as in we purged those. Was we hovering above a higher time frame PD array on Monday? You could argue yes, because we traded to the top of this rejection block. We never traded into it, and then we moved higher. Let's go to the 4 hour again. Where would be the higher time frame PD array in this sense? Well, I guess it would be this wick. If we did mark out this wick, you could class this as hovering because we didn't trade into it properly. And then that's when we'd anticipate, okay, we're likely to trade lower into it on Tuesday, and that's what we see. Again, it's hard. Obviously, hindsight's 20/20 vision. So me saying this is all nice now, but when you're in the charts live and you're trying to figure out, okay, what's the weekly profile likely to, how's the weekly profile likely to form? It's a whole other story, isn't it? So, what do I think? Is this a classic Tuesday low of week? I guess it is. Let's go. I'm gonna call this the classic Tuesday low of week. Because again, on the classic Tuesday low of week profile, it says know the higher time frame discount arrays, and when the market fails to drop into that array, odds are Tuesday will likely see that. So what we need to do is I might have made things really complicated here. Oh well. What we need to do is understand, did it fail to trade into it? Yes, it did. It clearly failed. We went there, but we didn't trade into it, and I guess that's what happened on Tuesday, which creates a Tuesday low of week. So I'm going to define it as being classic Tuesday low of week, and then I'm going to look at another one, look at the next week, and cool, I need to make these smaller. So we got another Tuesday low of week, and again price runs higher, so I'm going to just copy that over because this is the same thing. Did we fail on Monday to drop into the higher time frame PD array? Well, first of all we need to figure out what that higher time frame PD array is. We'll go to the 4 hour. Hopefully we'll see something. What was the higher time frame PD array in this? I guess we have a fair value gap resting here. We've traded to the 50% level multiple times here and here. So these lows, I guess, would be the PD arrays because that's what we've traded to. Again, being able to anticipate us running into these lows, another story really. These lows, fair enough, I'd say, because yeah, south side liquidity. So the south in this instance, south side liquidity was the higher time frame PD array, and we failed to drop into it on Monday. We also had a break in market structure here. So I guess when we watched that happen on that Monday, we'd be anticipating it to drop, and if it doesn't drop into it, that's when we'd be like, okay, let's expect this to happen on Tuesday. Where's the break in market structure? Here on the Monday, yeah. So we created a swing low, traded higher, and then broke down lower. Price shouldn't trade above there until we've taken out the discount array, which in this case was sell side liquidity, and that's when we dipped into it on Tuesday, creating the low. So now we can expect high prices for the rest of the week, assuming we are bullish. Nice. Let's go on to the next one. You can see we're starting to go into my current trading ranges. PD arrays. What have we got here? We made the high made on Wednesday, so this is the same one as this one. So how do we anticipate this? Interesting. I'm gonna make this bigger again just so I can see. Hovers below a higher time frame premium array on Monday and Tuesday, and then rises into the higher time frame premium array on Wednesday to form the high of the week. Know the higher time frame premium arrays, and when the market fails to raise to that array, odds are Wednesday will likely see the driver through London, New York session. Cool. So I'm gonna go to a high time frame, but first I do want to see what time these lows were made because I didn't actually look. This low was made at 10 a.m. That's New York session, end of New York, and this low was made at 9 a.m. so in between New York. So these lows on the Tuesdays seem to be made on Tuesdays around 9 a.m. in New York. We've got the high here made 10 a.m. New York. We've got the low here made at 9 a.m. which is New York. So you can start to see a pattern here and where to anticipate these moves. And that's what I just want to do really. It's just a matter of training my brain into recognizing them, hopefully anticipating them much quicker before they form. Let's go to the 4 hour and we'll have a look at that week. And then this is probably going to be the last one for this video, unless we can squeeze another one in. We'll see. So in this case, I guess the high time frame premium rate would have been this swing high, buy side liquidity. We'll drop down to the 1 hour and we'll see how we could have potentially anticipated such a move. So here we trade lower, and I guess remember it's rare for the high or low of the week to be made on Tuesday. So if I'm expecting lower prices, which I hope I would be at this point, for us to be trading lower Monday and Tuesday, that would, I guess, hint towards me and towards Wednesday being the high of week. Furthermore, we have a break in market structure here, although this was made on the actual Wednesday itself. So whether that's at too late of a point is another story. But once we break that should hint to us that, okay, we'll go for higher prices because we have a clear break in market structure, meaning that we should be looking for buy side liquidity. That then happens on Wednesday, and then you can see price turns around. What time does it happen? 8 a.m. again, New York, it makes that high. And then we go lower for the rest of the week. So I guess it's a purging of liquidity in that sense, that it creates a short-term buy side, moves lower, failing to make a high of the week. Again, we should be assuming I'm looking for low prices. So if I'm watching this happen, we're trading lower, I'm like, wait a minute, when are we making the high of the week? Likely going to be Wednesday, and that's what we see here. Cool. Remember, hindsight's 20/20 vision, but practice is practice, so we need to be able to recognize these things. Tuesday high of week, classic. So I'm going to quickly go grab that from the PowerPoint. Tuesday high of week. Copy. Paste. The high of week is similar, is the same as the other one, just reverse. So I guess it's when price fails to trade into a higher time frame PD array. So we'll go to the 4 hour and we'll look for that. These charts look a mess. We'll look for that higher time frame PD array. In this case, it's this fair value gap. I guess the 50% level of that. Did we trade to that here? Yes, we did. Of course we did. And I guess the high is here, which would act as short-term buy-side liquidity, which is engineered liquidity. That's the one. So I'll draw that down to 27. So you can see on Monday we traded straight higher, but remember Mondays rarely ever make the high of the week. We move lower here. We still haven't taken out buy side liquidity. We've got buy side resting above here and here. So this seems like quite a easy one to recognize. We have the fair value gap and the 50% level of that, which we didn't actually trade to. So then price rushes up, taps into that buy side liquidity and the 50% level of the fair value gap, which are higher time frame PD arrays, and then sells off for the rest of the week, creating a classic Tuesday high of week. This was formed at 5 a.m. So that's the very end of London session, and as soon as New York starts 7 a.m. you can see we kiss it goodbye and start to trade lower for the rest of the week. So I'm going to mark this out as buy side liquidity as well. I'm going to do another one. This was Monday making the high of the week. Yeah, I guess it's Monday making the high of the week. This week, I remember I did look at this before this video, and it did throw me off, because here Wednesday trades higher, fails to take out this high though. And although if we're not counting that, and then again you could argue why you're not counting that as being the high of the week if it's the high of the week, Sean. Who knows? Let me see. Which week was it? It was this week here. In terms of a high time frame PD array, this is not, I wouldn't say this is a very good example, to be honest. But you can see there's a reversal that week, a big one, because after that price traded higher since. So what I'm going to do is I'm going to leave that week because it did throw me off a little. I'm going to go straight to this one. We've got Tuesday low of week again, classic. So I'm going to pull that from here. So Tuesday low of week is definitely classic because you can see how often it forms in terms of out of the ones we've done. What was the higher time frame PD array we traded into? Lower time frame PD array. This case it was a rejection block starting from here. And I guess this order block here we traded into. Or was it even this one? It was this one, wasn't it? Yes. So we'll drop down to the 1 hour and we'll look how price traded down there. Okay, we have a nice bullish order block here. So we traded higher on Monday. Remember, if I'm expecting higher prices for the rest of the week after breaking structure here, I'd want to see the low of the week be created within this range, I'm guessing. You can see that we trade down into this order block and then we move higher for the rest of the week, creating Tuesday, classic low of week. Here, Monday was the low of the week. Oh no, yes, right. Monday was the low of the week, and that was last week. That's the closest to a Tuesday low of week I guess we're going to have. And now you can see we're in the current trading week. So yeah, that's pretty much everything for this backtesting video. I hope you enjoyed. I hope you learned something. This is just general practice, and I think it's important to do. But yeah, thanks for watching guys, and I'll catch you in the next one. Peace.